Oh. Hello? I'm going to call you on my other phone. Oh, actually.
Hello, everyone. I see people are slowly getting on the call here, so we'll go ahead and give people just a few minutes to log on, and we'll get started here in just a few minutes. Right now, everyone is muted. I will unmute Carrie and Jacob, who will be some of the co-presenters today. But I'm going to go ahead and mute myself here for just a few more minutes and let a few more people log on.
Meeting. Enter your meeting ID, followed by the pound.
This is Jacob. Jonathan, can you hear me?
Enter your participant ID, followed by pound, or stay on the line to be connected automatically.
I can hear you, Jacob.
Okay, awesome. I'll put myself back on mute. I just wanted to make sure everything was working.
Yeah, Jacob, can you actually stop sharing for a second, please? Thank you. I will actually take control of the screen and share and control the slides here. Okay, great.
So you'll go through the slides, or
Yeah.
are you going to have me share later?
You can let me know just when you're ready. You can say, just go to the next slide.
That works.
All right, I'm going to go ahead and share my screen and unmute Carrie as well. Let's see here. I think, Carrie, is that you? Can you hear me?
I can hear you, Jonathan.
All right, I can hear you. And Jacob, you can hear me and I can hear you?
Yep.
All right, great. All right, everyone else, we're gonna go ahead and mute for right now. We will be pausing for questions and answers throughout this. If you do have any questions, please, there's a couple ways you can do that. Either we'll pause for questions and I'll unmute everyone, or there is a chat. Actually, let me share my screen. That might be helpful. There is a place where you can see at the very top, you should see where it says mute, managing participants, annotate. There's a place on there where you can actually, when you click on more, it says chat. And if you click on chat, you can actually type questions either for the whole group to see or just myself. So that's another way you could enter questions. And all right, like Jacob just did. So let's go ahead and get started. I know we're going to continue to have people come on. We're also recording this as well, so we'll be able to share the recording with those of you who are not able to attend. So, there's been a lot of talk around the PPP loan and the EIDL loan. Kerry Strain, who we have the pleasure of hearing from later today, he holds 2 webinars a week, which have been very informative, and we've been able to participate in those. And Kerry, I appreciate you always including us on those. And if you still have questions about the PPP or the EIDL loan, although that's not the primary focus of today's webinar, certainly we're happy to answer those questions. Or, Kerry, I believe you guys have another webinar tomorrow that you'll be really diving down deep into those 2 topics, right?
That is correct.
Perfect. So we'll make sure to send that link to everyone who wants to be included in that webinar tomorrow as well. So the purpose of today's call is really twofold. One, we're going to talk about a topic that isn't really being talked about a lot, which is the tax side of things, the tax benefits or the tax credits and the tax opportunities that are available through the CARES Act. In addition to that, I've also asked Kerry, and appreciate it to Kerry, and I'll do a more formal introduction to Kerry as he gets started, to talk about what are some things you can all be doing in your practices while you are getting ready to relaunch. Just a second, let me mute.
Okay, I can just grab it, come back in here. Okay.
Just bring it over here. Spencer's not eating.
Okay, bring it over there.
All right. So we're going to ask Kerry to talk about what you can be doing in your practice to relaunch and be ready to get back into action when that time comes. So just a little bit of so Jacob Stewart, who many of you have met and who many of you know and who many of you have the opportunity to interact with our team, will be going through some of these tax benefits and tax changes, and then we'll have the opportunity to hear from Kerry as well. So Jacob, I'll go ahead and turn the time over to you.
Awesome. Thanks, Jonathan. So I'm just going to be going through some key concepts that you should be aware of. Many of them maybe won't apply, but they're worth bringing up in case one of you or maybe somebody you know could benefit from some of these tax provisions. So Jonathan, if you could move on to the next slide, we'll just kind of do a quick overview, and then I'll dig a little deeper into each one.
Sure. So can you see where it says key concepts?
I do not see that. Let's see. Oh,
I see
there we
it,
are.
Jonathan.
I got it. I had my own slides up, and I didn't realize it was
No problem.
different. So, all right. So, our purpose today is a brief overview of each of these things. Everybody's situation is going to be a little different, and if you have particular questions about any of these, you can reach out to us, or you can reach out to your tax professional, your CPA, and they would probably help you to determine whether or not that particular item applies to you. So you saw the list of the key concepts. The first of those that I'll talk about is the payroll tax credit. So 50% of the, let's see, Jonathan, is this my? Oh yeah, it is. Okay, sorry. Could you got ahead? Could you go back to? Oh. Okay, there we go. So the payroll tax credit is 50% of the amount that is paid to employees during these few months, in between March 12th and January 1st, 2021. So March 12th, 2020 and January 1st, 2021 can come back to you as a credit when you file your 2020 taxes. So at the very most, you can get a $5,000 tax credit. So it's a dollar for dollar deduction of your tax liability. There are a few caveats though. So first of all, 50% of you have to have had a reduction of 50% in your gross receipts compared to the same quarter in the previous year. So if that's most of you and most of us, our income has dropped significantly during this shutdown. So most people would probably qualify under that. Fewer than 100 employees, probably most of you qualify in that as well. The only thing that would probably disqualify a lot of people is If you are receiving a PPP loan, then you would not qualify for this credit. And so the question comes up, well, what's better? Should I try to qualify for this credit, or should I do the PPP loan? And the answer is going to vary depending on your situation. But generally speaking, the tax credit is $5,000 maximum that you'll get. It's a $5,000 savings maximum that you'll get on your tax liability. The PPP loan can be a lot bigger than that, obviously. So if you need the loan, it's better to go with the loan and forget about the tax credit. But if you don't need the loan and you're able to pay your employees, even though your income, your receivables have decreased by 50% or more, then obviously the tax credit's going to be fantastic. You know, you'll get a nice credit next year when you file your 2020 taxes. So probably most of you won't take advantage of this because I think most of you are doing the PPP loan, but it's good to be aware of. So then the next one, if you'll flip the slide, Jonathan, the next two, I should say, are delayed Social Security tax and AMT credits. For Social Security tax, you have the option to delay the employer portion of the Social Security tax until January 1st, 2021. So you can essentially stop paying your employer portion of the Social Security tax for the rest of this year. It's not forgiven, although that is a discussion that's been on the table in Congress. But under the current law, at least, you'll owe half of that by the end of 2021 and the remainder by the end of 2022. So it's essentially it's a deferral of the employer portion of the Social Security tax. So it's just an option that you have available to free up cash flow. The other one on the same, same slide is for AMT, that's alternative minimum tax credits. Probably doesn't apply to most of you, if any of you. Alternative minimum tax essentially went away starting in 2018, but for those who had that tax in the past, the tax jobs and the new tax law that was passed at the end of 2017 created a credit for previous alternative minimum taxes that you get spread out over a number of years. So under the CARES Act, those credits, if you had qualified for any of them, you get essentially more sooner than you otherwise would. So again, that probably won't apply to most of you, but if you did have alternative minimum tax prior to 2018, then this is something you should look into. Next slide. All right, so the net interest deduction has been expanded. So for a business owner, if you have debt or business debt and you're paying interest on that debt, under the normal law, up to 30% of that is deductible before your EBITDA. So like if your EBITDA was 100,000 and 50,000 of that was interest, $50,000 you were paying in interest on loans, then under the previous law, you wouldn't be able to deduct more than 30,000 of that. But under the new CARES Act, you can deduct 50,000 of that. So hopefully most of you aren't paying that much in interest, but I think maybe we have a couple of clients who might be. So just be aware that if you are paying a lot of interest on your business debt for 2019, so last year and this year, you are able to offset your income by up to 50% of that. Next. All right, so this is where it starts to get pretty exciting and where the biggest opportunities are. In the past, qualified improvement property had a 15-year depreciation window. When the new tax law was passed in 2017, there was a mistake in the new law, or this was left out, and what used to be depreciable in 15 years by default was over a 39-year period. So many of you could have gotten a bigger depreciation last year had that law been written correctly. The CARES Act corrected that error. So now any qualified improvement property is subject to the 15-year depreciation schedule. Why is this cool? Well, first of all, any tax returns, so 2018 and 2019 tax returns, you can take more of a depreciation. So you can even go back and amend your 2018 return on interior improvements. So qualified improvements are things like renovations that you've done to your office space. This isn't residential property. This is, like your dental office or any commercial property that you might own. So, any kind of interior renovations that you may have done to get the space ready or to update the space would count as this. What is specifically excluded is if you have expanded the building, the expansion doesn't count, nor do elevators or escalators or any kind of internal structural framework. So you have to kind of parse these things out, and that's why I put in there cost segregation analysis. So if anyone on this call has made qualified improvements to their office space in the last 3 years, then it may be a really good idea to do a cost segregation analysis, or if you've already done one, to go back and amend your 2018 return to reflect this particular type of property and get a bigger deduction, which again will get you a refund and free up cash flow for you. The other thing that's really cool about this is anything under 20 years, anything that's depreciable in under 20 years, qualifies for 100% bonus depreciation, which means you can deduct the full cost in year one, as opposed to the 39-year window wouldn't qualify for the 100% bonus depreciation. So that can make a really big difference for some people who've made improvements to their office space in the last few years.
Yeah, so Jacob,
Next slide.
Next slide. So I think, like you said, this is one that's going to really benefit a lot of our clients. I mean, even as you're going through this, like thinking through all the clients we have, I'm sure you are too, that recently, purchased a building and then did some, remodels, or have owned their building, recently, updated the structure. So I think this is going to be a big benefit for a lot of our clients. And again, I'll just reiterate, obviously, the purpose of this meeting or this webinar is not that we expect all of you to know and to learn the tax law. That's obviously what you have Jacob and the team for, but to just give you kind of a nice 30,000-foot view overview of all these what we feel are really exciting, and the PPP. There's a lot of focus around the PPP and the EIDL loan right now, but this is where we think we're going to see another wave of really big benefits for a lot of you on these calls or on this call. As we go through our progress meetings, we'll be looking at, Jacob and the other team will be looking at these new tax changes and how they directly impact and benefit you in your specific situation. Let's do your last slide here, Jacob, and then I'll open it up for any questions. Sounds good.
One other thing I'll mention there for the qualified improvement, some of these things we're not going to know necessarily as a team. So if it does apply to you, if you know that it does apply to you, you would definitely want to talk to your tax professional, whoever's helping you with your tax returns, and or notify us, or probably both, and we can get into the specifics. So in the next slide, it's actually related to the qualified investment property, which is even more exciting. So a net operating loss, as most of you I'm sure know, is when the tax liability or the oh gosh, now I'm not articulating well. Basically, you're spending more money than you're making, right? But that doesn't have to be an actual accounting loss. It can be something due to depreciation. So, for example, in what we just talked about with the cost segregation and the 100% bonus depreciation, you might be in a situation where you have a very large deduction. Well, in the past, it would be something you could carry forward. But under the new CARES Act, you can actually carry it back up to 5 years. So if you did a cost segregation analysis and showed in 2018 a loss, a net operating loss, or 2019, a big net operating loss, or 2020, you could carry that back 5 years. So this is why that's cool. You can get refunds for prior year's tax returns. You can also, some of those years had a higher tax bracket than what we have currently. So you can actually get more bang for your buck than if you took the depreciation or the deduction now and going forward. So not everybody's going to be able to benefit from it because you have to have an operating loss before you can benefit from this. But if you do, you're in the magic territory, right? You can get a lot of money in your pocket. The optimal year to do this in would be 2019. Well, in most cases, 2018 may be good if you can go because that would allow you to go all the way back if the loss is big enough, all the way back to 2014 or 2013. But the reason I say 2019 is because most people haven't finished their tax returns yet, so no amendment would be required. And there'd be no money out of pocket necessarily, except I guess the cost of doing the cost segregation analysis. You would just file your return and get a really big check from either from reimbursements from prior years, or from this year, you would just pay less taxes. So that's why 2019 would be the optimal year. If you are going to do the 2018 year, the deadline is June 30th. So the time frame is pretty short. Not that you can't amend the return after that date. You can still do that. But to qualify for all the benefits under this new law, you have to do it by June 30th. Another item that the CARES Act changed was you were limited to 80% of the income was allowed to offset your, 80% of the loss. You were allowed to offset up to 80% of your income with the loss. But that 80% limitation was taken away temporarily until 2021 in order to allow you to take as much loss as possible. So between that and between the bonus depreciation, there's really no limit on how much loss you can take by doing a cost segregation or by any other kind of loss that you can show. Now, 2020, many of you may show a loss or at least a significant reduction as well because business has been shut down. So, if you take a lot of this in 2019, that doesn't mean you can't also benefit from it in 2020. So just keep that in mind as well. The quickest way, if you're wanting to get a refund and money in your pocket soon, the quickest way to do that would be to fill out either Form 1139 or Form 1045. Those are just for your CPA's benefit. And you could submit it by fax. Usually you have to mail it in, but they're now allowing you to do that by fax. And within 90 days, the IRS will give you a tentative refund. So you'll have money in your pocket within 90 days. So if that's something that you're going to be applying for, the sooner the better. Those are really the biggest items under the new law that I think apply to most of you. There are other items that probably don't apply, so I didn't put them in here. But I guess we can open it up to any questions on this or anything else tax-wise that you guys have been wondering about.
Yeah, I'm going to go ahead and I'll unmute everyone here in just a minute. I'll let you know when that happens. Just please be sensitive to the fact that everyone will be able to hear you on the call. So if you don't have a question, you can just remute yourself. You can also, a couple of you have texted me questions, or you can even put a question up here in the chat box. I have a question, Jacob. Do you see, are these really going to benefit our clients more in the income tax liability, or how can they take advantage of these in like capital gains? As you know, we have several clients that are looking at possible capital events this year and next year. How can they use some of these tax strategies to offset some of those potential capital gains, or can they?
Yeah. Yeah, they can. It just may not be as advantageous. So, which is where the carry back may make more sense. It may put more money in your pocket because in as much as you can offset ordinary income, that's a higher tax bracket. So certainly if you've offset all of the ordinary income you can, then yeah, take advantage of the deduction and offset some capital gains. But you're going to get more bang for your buck if you're using it for against ordinary income.
Okay, thanks. I'm going to go ahead and unmute everyone. I know this is dangerous, but all
I
right.
was going to mute everybody.
Anyone have any questions for Jacob?
Here, hold on, just talking. Got a question.
Any questions? All right. I'm going to go ahead and
Either I lost everybody or I explained it so well that it's clear as clear can be.
You just explained it so well.
thanks, Bill.
All right. Awesome.
Oh, I got a quick question.
Yeah.
Sure.
If we did a cost segregation analysis years ago, let's just say 4 or 5 years ago, can we do another one again?
Yeah. So you have a couple of options. You can either go back to that company and have them adjust it, or you can just do another one entirely, especially if you've made improvements in the last few years. That may be something you'd want to do.
Cos, did you get that done when you guys made all those improvements in your office that you have now?
Yes, actually, cost segregation was a great idea that actually I got from Rob Bro. It was wonderful.
Okay.
Let me actually mention one other thing that I forgot to mention. I put it up on my slide, I thought, but I didn't. Oh, I know why, because I made an update since I sent this to Jonathan. There was one item that probably doesn't apply to most of you, but I know a couple of our clients, you have some rental properties, or maybe you've sold a building in the last year or two. There's another tax credit for real estate developers and home builders, where you can get a $2,000 credit per dwelling unit. So like if you have an apartment complex with several dwelling units or a fourplex or something like that, you might be able to qualify for a $2,000 credit per unit. So just be aware of that as well.
Okay. Any other questions before we shift gears? All right. I'm going to go ahead and mute everyone again.
Thank you, Jacob.
Yeah, you bet.
They're muted again.
All right. And let me unmute. All right. Let's see here. All right. I'll unmute. I think, Carrie, you should be unmuted. And Jacob, I'll unmute you as well. Carrie, can we hear you?
Yes, you can.
All right, excellent. So, this is certainly a man that needs no introduction. Many of you on this call have worked with Carrie, are working with Carrie, or certainly know about Carrie. Mr. Carrie Strain and I have known each other for 15 years, I think, Carrie, something like that. And Carrie is, for me, a dear friend, a trusted advisor, someone who Carrie and I probably talk to each other 2-3 times a day, just bouncing off information. I think Carrie's probably one of the hardest working professionals in dental, for sure, that I know of. And we appreciate his contribution that he makes both to our clients, but also the dental community. So very, very honored to hear from Carrie. And again, I think this is something that's really important, looking at what you could be doing and need to be doing. And, now, especially a lot of you are asking, right, Carrie, a lot of these doctors are saying, hey, I got approved for the PPP loan. I'm going to get the money. I have to, and we have some clients that either have already received the money or going to be receiving the money this week or next week. what do? I got to bring all these people back. How do I make the best of that while we're still not seeing patients?
Yep. That's the $64 question. Hey, Jonathan, I'm going to request control of the mic, of the mouse.
Sure. Let me do.
Okay.
Got it?
Yeah, I wonder if that allows me to move the slides. Well, it doesn't. So I'm going to allow you to move the slides.
Why don't
I'm
I
gonna
do
give
it?
up from?
You want to take?
No,
take
we're good.
the screen.
No, you go ahead. No, you go ahead. Go ahead and move the slides. We're good. Pump it all the way down to show up the slides. Good. So, yep, good, right there. So, hi everybody. I'm Kerry. Gosh, listening to Jacob, I was in the accounting business a long time ago, and happy to be on the call with you today. I see several of our clients on there, former clients, and we're in a tough time. And we've had this seminar called Create Your Action Plan, Being Proactive in an Inactive Period. And I was on the phone with several clients today up in Idaho, and they just got shut down till May 1. You know, our state here in California, what are we, May 15th? Jonathan, I think I was just on a conference call with a client down in Houston, and they're going to open up May 15th with a soft launch and then go firm a little bit later. We don't know. We don't know what launch looks like. Well, we certainly know where we are today, and we need to prepare for the launch. And as Jonathan said, you're going to get your PPP loan funded within 10 days of applying. I got mine funded within 7 days. So I got my money yesterday, and it's pretty amazing. All of a sudden, plop, there was a lot of money, a lot more money sitting in my bank account. And there's very, as Jacob's talking about very specific things, there's very specific things that you can do with this money. And we're going to talk about it in a minute. And if you do anything else with it, you're going to be either asked to repay it immediately or you're going to be prosecuted. So, I get a lot of crazy questions. I was conducting a seminar, Jonathan, you were on it yesterday, and a lot of people were asking, how can I basically manipulate my payroll to maximize the forgiveness? Jonathan, that was the gist of the questions, right?
Yeah, a lot of them.
And here's what I'd say. Well, how can you manipulate your patient's insurance benefits to manipulate reimbursement? You'd be appalled at thinking you do that. Well, I hope you have the same feeling of being appalled to thinking you can manipulate your payroll, because the SBA is going to find you and they're going to hunt you down. And if you use that money for anything that's not approved, they're going to prosecute you. So do it the right way every day. So what we want you to do is, and we're doing it with all of our clients, is review your schedule and identify the days you'll be closed during the shutdown. I mean, we're looking at anywhere from 7 weeks now for some clients to 12 weeks. So Dr. Kaz, I heard you on the phone talking about Rob Bro, and you're both great clients of mine, and I know you guys are dear friends, and you're going to be shut down for as long as you're going to be shut down. When we started this shutdown period, sheltering in, we thought, wow, we're all going to open up the Monday after Easter. Liar, liar, pants on fire. And anybody who says they know when we're going to be opening up is lying to you right now. Governor Newsom in California is in charge of that. Trump just booted it back to all the governors because he didn't want to be seen as a dictator or the king. It was politically not working well. And so we don't even know how to operate. What are you going to do for OSHA compliance? Were you going to be the first dentist that has a new COVID case reappear, a new patient die? These are all things everybody's afraid of. We just can't predict it yet. There's two things you don't know for sure. One for sure, when are you going to reopen and what's that going to look like? We're still putting that plan together. And B, when are you going to get your money? And you're going to get your money within 10 days of funding, of being approved. And there's no change in that for your PPP loan. Nobody cares that you're a rich dentist. And compared to everybody else flying, and I only work with dentists, you are considered in the political arena as high-income people. And politicians don't attract themselves to high-income people except for donations. Okay? And other than that, they're not going to say they're looking to benefit you, the rich guy. I mean, Trump's properties had to be excluded from being able to benefit from any of the CARES Act money because he was president and was conflicted out. So let's come back to the basic plan. Right now, I think you should plan, you should understand your state you're in and know when you can open again. And you might want to look back. The one issue is look back on your 28 days. And let's say you're the doctor, you produce 5,000 a day. We just lost 140,000 in production. And let's just say you had 2 hygienists and the production goals were 1,500 a day. So that's 3,000 a day times 28 days. So whatever that is, 78,000. So collectively, we just lost $200,000 worth of production. That's a lot of money, but it's really not when you look at your net. You know, maybe it was $70,000, $80,000 of net profit. I don't know. But when you consider the benefit of the PPP loan, and as Jacob said, maybe you're going to go after the tax credits, which I don't see, Jacob. Everybody's looking at the PPP money because the PPP money is pretty incredible. Jacob, are you still hot on the mic?
He is.
Jacob, I got a question for you. You ready?
Yep, I'm here.
So I borrowed $200,000 on my PPP loan, and it works out that I get it all forgiven. Right? You with me so far?
Right. Yep.
Is the forgiveness of that debt income to me, as taxable income to me as a business owner?
It is not. So
that's step one.
That's a huge
So
deal.
that is huge. I just borrowed $200,000 and the forgiveness of that debt is not income to me. That's step one. Step two, I spent that 200 grand on wages and rent and utilities and interest. Are they a deduction to me?
I'm not sure if you got the money from the PPP loan. I would assume so, but I'm not positive.
Yeah. No, there's no qualifier as to whether or not that's a deduction for my business yet that I've seen. Have you seen any?
No, not yet.
No, but that seems like a big loophole. So I would be
No,
cautious about
it's an
that.
incentive. So if
Yeah.
if it is fully deductible to me and I'm in a marginal tax rate of 50%, how much tax did I just save on $200,000 worth of loan proceeds that I use for business purposes?
Now you're putting me on the spot, making me do math, huh?
What's 50% of
50,000 or 100,000 rather.
I just saved 100,000 in taxes. So gang, whether or not you can use the money after you open up or you have to use it before because you got the loan and you had 8 weeks after the loan was funded to start using it, as we know it right now, I don't have to pay tax on the income of the forgiveness of debt. And I'm able to deduct the expenses. So not only do I get to keep my people employed, which is the principal objective of the Paycheck Protection Program. It's not the Profit Protection Program loan. It's a paycheck protection loan. And I get to deduct all those on my taxes this year. Nobody said anything differently. And I get that to offset other income. And that taxable income that it offsets marginally saves me about 50% if I live in California, federal and state taxes. And it saves me $100,000 in taxes, which is the offset of the payroll tax credit. So not only did I get to bring everybody back in and use them, but I'm getting an income tax reduction. So food for thought. Check with your CPA, as Jacob said. But we need to figure out, when we started out with this strategic planning on being proactive, we wanted to figure out how much production you lost. But then the shutdown period has grown, and the move has been, yes, to add more days lost during the shutdown in the post-COVID period. So if you lost 28 days, Kevin, Scott's on the phone, you could make that up over 28 weeks by just adding a Friday to reel it in. I don't know that you'll have to do that. But look at the summer months ahead and add Fridays. Some of our clients are going to add Saturdays. Some of our clients are going to add evening hours. I'm not sure if they're going to let you put 3 hygienists together in a row. I'm not sure what the new social distancing and business distancing responsibilities are going to be. But I will say this, if you want to make up the production still needs to be delivered for the dentistry that was going to be done. You're going to be in a busy period in the weeks and months ahead. The biggest concern I would have if I was a general dentist is, what about if I closed the door on March 15th and I was due on March 16th to see a perio maintenance patient who had been in on December 16th, and that perio patient in December 16th to March 16th that I was supposed to see from March 16th to June 16th, really the December and January patients haven't been seen. I need to get them in right away because they've got a periodontal concern I'm trying to abate. I'm trying to keep back. I'm trying to keep back the negative impact that's happening in the health of these patients. So I think the priority is your perio maintenance patients you saw in December, in January and February that we're not seen in March, April, and probably most of May. You're going to want to add them to Fridays and reel them in right away because they've got a health concern. A lot of your healthy 6-month patients who, gosh, weren't seen on March 18th, March 20th, my birthday, they're going to be scheduled again on September 18th and September 20th. So you're going to be able to look at in your dental intel boards on your patient finder, you're going to be able to find out who all those patients are. You'll be able to look on the performance board and see all the people that canceled or no-showed. You're going to be able to work through that. And working with your advisor, you're going to have to figure out, where am I going to put all these patients? I was on the phone with a client, Jonathan, down in Pacific Beach, down there in San Diego. And as of last Friday, he had 800 patients who've not been able to be seen in the last 2 months or whatever, month and a half, in hygiene. And he goes, my God, where are we going to put them? I said, doctor, that is a $64 question. So based on the number of patients you haven't seen, that's how you get paid, seeing these people. You need to get them in the schedule. Now, I don't know when you're going to start calling them to put them in the schedule. I personally wouldn't do it until I was 2 to 3 weeks before knowing I was going to be opening. And right now, I think in most of your cities, you could have a pretty confident soft opening date around May 31. I know the government, keeps moving the goal line on us. In Idaho, they moved it from tomorrow till May 31, or April 31, May 1. And I think that could get moved again. I think certainly the government's going to prioritize who can be open based on the number of cases they have in the state and the number of people that have died. Nobody knows, so I understand it, whether the patients can get the virus again after they've had it. Who knows? And because they can't put a lid on it, and people are still getting it and dying it and not subscribing to sheltering in, it's a political football and a society's football. So you're going to have to meet with your advisor, really understand what your state's saying, find out how many patients you've lost out of continuing care, find out how many people that you've lost from restorative purposes. And as we move into July, your time off period right now for March and April and part of May is going to be your vacation, and you're going to be busy in the fall because your patients have a lot of need. And then determine what that scheduling template's going to look like in the first 90, then 180 days after reopening. My morning huddles with my team, we have them every morning for an hour. They're quite energetic about the new moving goal line for reopening. And what are we going to say? And as I said this morning, I said there's an old acronym called WAIT, W-A-I-T, and it stands for this. Why am I talking? I said, quit trying to force the reopen date until the government says we can. Once you know that, you're going to build your plan accordingly. Moving down, you need to have a good handle of your financial situation. We've been working with our clients on their reopening plan since March. Seems like a long time ago, but it's only been less than 3 weeks ago. And back then, we assessed how much money you had at the beginning of this period. What could we collect off receivables from insurances, patient receivables? How much money did you have in available credit cards and lines of credits? Now we're looking at how much money are you going to get in the EIDL loan and also the PPP loan. We needed to know your total sources of funds. Then we had to have the uses of funds and going through what were you going to spend in April, what are you going to spend in March. And now we're expanding that spreadsheet to look at not only April and May, we're looking at June and July. not only are we looking at June and July from the perspective of when did you get your PPP loan, 8 weeks to spend the money to be forgiven, not 9, not 10, 8 weeks. That's probably not going to change, and I would count it at not changing. And I was talking to a couple out of Pittsburgh today, and they go, well, we're going to get our funding tomorrow. And they said, should we bring all of our staff back right away? I said, when can you open? She goes, and they said, May 15th to June 1st. I said, I wouldn't bring them back all the way, all at once. I said, I'd probably bring back people just to reach out and put forth a care call to our patients to check in. But it's going to be insensitive to call the patient and say, wow, you've got $1,000 of insurance and you've got $2,000 of treatment. Let's talk about that now. That's not the priority now. Caring and safety is the priority now. So we want to build a plan to make sure we don't run out of cash reserves, and we build a recovery plan to take care of our patients so that we can economically make it through this period and stay connected with as many patients who are going to be as frightened as you've ever imagined, because nothing like this has ever hit them. Jonathan, let's go on to the next page, please. You can go all the way down. So the proactive part of your loan is, get your PPP loan. As I understand it right now, 250 billion of the 350 billion has been used. There's a big political fight going on over an additional $250 million they want to add to it. Pelosi and her side of the political aisle wanted to add to it that the money would be available to people who are undocumented aliens, and they could borrow money just like citizens who've been compliant paying their taxes. The Republicans said no. So I don't know that we're going to have any more funds put in that pot. It sounds reasonable, but common sense, elected officials, not all that logical. I was on the phone with a client of ours up in Rapid City, South Dakota. Their PPP loan request is $700,000. They were talking to their orthodontic friends who said, we should wait. And I said to the owner, I said, there's an old saying, a bird in the hand is worth two in the bush. And if you don't get that money, and by the time you go to apply for it, it's not available, nobody's going to care. He goes, I'm applying tomorrow. Understand the terms of your loan. I read my loan documents. I sent them to my attorney. They're very vague. I even sent my banker a question today. Does the forgiveness period calculate only wages paid or incurred during the period and paid, or incurred during the period and paid after the period? He goes, we don't know yet. They're still waiting for information from the SBA. So know your terms of your loan. At the very least, you're going to get some method of calculation for forgiveness. And for whatever's not forgiven, you can either pay it back when that forgiveness is determined, or you can borrow it at 1% over the balance paid out over 2 years. Budget the uses of your loan proceeds. Don't use it for anything other than that it's spelled out for you. You can't use it for your car payment. You can use it for wages and corresponding soft costs on wages, rent agreement obligations, which would include common area on triple net leases and things like that, and taxes, insurance, interest on debt that you had incurred before February 15th that was in place, and utilities, which telephone, rent, power, gas, etc. Maintain great records, like preparing for an IRS audit. I just got a text while Jacob was speaking from a client in West Covina who's talking to me about gathering his records, and he hadn't maintained good records. And the records you had to submit for getting your PPP loan are like nothing that you're going to have to submit to get forgiveness. Don't get cute and try to outfox the SBA. That's stupid is as stupid does for us. So please use your team accordingly. So please determine the use of your team accordingly. Sorry, we fixed a word here. When are you going to open? Okay, what are you going to have somebody do before you open? You can certainly have people come in and do some housekeeping. One office had just finished a remodel. They want to put the supplies away. That's great. You can do that. You want to have some people on the phone just reaching out and saying, hello, how you doing? You can do that. You want somebody to clean up patient records because the charts are terrible in the computer? You can do that. So you can employ them, and the government's going to give you the money to hire them, and you can use that money, and it's not coming out of your pocket. Then you have your soft launch period. What is the government telling you it's got to look like before you open? And you're going to have that. Some of my clients are putting forth emergency only in the soft launch period, and then they'll go to a full launch when they know what they can look like and bring the patients back into the facility that they have. But nobody can predict what that looks like yet. And I'm sure, I know there's some, local and state CDA members on the call, and I think the government, the CDA will be giving us guidelines. Jonathan, let's go on to the next one. Hello?
All right, come on.
Oh, Jonathan.
It's thinking.
PowerPoint. It's coming.
It's coming. I don't know why it's.
There's some concept at once. You might want to hit escape and see what happens.
All right.
Or delete and escape and see what happens. But your computer's thinking. Basically, everything's going to be, I'm going to tell you what happens. Your bank lends you the money on the PPP loan. It's guaranteed by the SBA, federal government. You can only use it for specific purposes because you're personally not obligated to repay it. So if you were thinking to go to Palm Springs or to Vegas and blow it, that's fine, but you can't do it with the public's money. You can do that with your personal money. And since you didn't have a personal guarantee, they're not going to let you do this. Jonathan, are you stuck here?
Yeah, I think we're stuck here.
I hope not. Hold on. Okay, no?
Yeah, I don't know what's going on, but I think we're stuck here.
I would hit escape and delete at the same time.
I'm a Mac person. Let's see if that works.
Oh, boy. Well, I'd throw it against the wall. So listen, if any of you want to reach out to me and just ask me any questions, have us look at your liquidity position at the business. I know Jonathan and his team look at it personally. We're glad to do that. If you have dental intel, I'll get on dental intel with you. I can be reached at Kerry, Kerry, at strain.com. STRAINE is spelled at the top, so it's KERRY at strain.com. Or you can reach me on my mobile number, which is area code 916-765-7200. And we're going to be continually supporting our clients and any of you that work with Aligned Advisors with any questions you have over the next few weeks, getting ready to relaunch and emerge out of this nightmare that we're in. It's like Groundhog Day. Every day you feel like Bill Murray in that movie. But, you're in good hands with Jacob and Jonathan and that team. And we appreciate, being able to help out our clients so we can emerge from this. And in the years down the road, look back and go, wow, what a crazy time. And we got out of it. And the government stood up for us and did the best they could. And we made it. So we have a lot to be grateful for. You're probably more liquid than you know. Yes, it's a little nerve-wracking to see clients with only $5,000 in the bank, and that's all they have before they maximize their credit cards, et cetera. I was just on the conference call with a client in Pocatello that's got over $600,000 in the bank and still is going after his PPP loan. Because why shouldn't he hire the people and get the money forgiven? He paid for it in taxes. So, Jonathan, that's all I have to say. And
all right.
If anybody didn't get those names and numbers, they can reach out to you and get them.
Yep, and we've had several clients text and email us saying they weren't able to make it, but asking for slides. So we'll make our slides available for anyone that would like them. Also, we've recorded this webinar as well, and we're happy to share that with whoever would like a recording as well. A couple things, we are hearing from several clients that their EIDL loans are being processed and they're being contacted by the EIDL loans. Yesterday, we probably had a dozen or more clients that I spoke to that all said that they had received their $10,000 grant. No notice, they just went into their bank account and it was sitting there. I did see an email from the SBA 2 days ago stating that the SBA, the $10,000 grant was going to be $1,000 per employee up to $10,000. I think, Kerry, you said you saw the same thing. So that's, anyways, those are being, it looks like they're starting to process those. And again, please reach out to us and discuss, your options when that comes time. I'm going to unmute everyone again here at the end and give an opportunity for everyone to ask either Carrie or Jacob or myself any questions that you have before we sign off. So everyone is unmuted. Unless you've muted yourself on your computer, then you'll have to unmute yourself. Any questions for Carrie?
Right, I don't know where you can get it right now. You can go online at cda.org and they should have something there.
Oh, I hear Lee. All right. All right.
Is that a question?
Yeah.
So we're bringing all of our staff back full time on Monday. Work on projects in the office and things like that. We've got our loan in, or got approved for it. What happens if there are staff members that don't want to come in? They want to stay at home. Do we that affect our grant status of the loan, or what happens with that forgiveness, or what happens with that?
What do you do about employees who don't want to come back?
Well, or they don't want to come in right away. So like if we normally have 20 employees and only 12 want to come back, like how does that affect our forgiveness of the loan?
Do you have the ability for them to work from home?
No.
Maybe, I mean, not typically, but we maybe could figure some stuff out.
Well, I think you need to determine what you're going to have them do. I mean, just because you borrowed, have you been funded your PPP money?
Yes, tomorrow comes.
And how much did you get?
192,000.
All right, so your payroll is running $19,200 a week right now.
And the only reason
So-
he does such old.
Well, his wife, ex-wife,
Sorry.
I think I would be judicious about who I brought back first, and I would stagger it. When in your state are you currently planning to reopen?
it was April 19th. We're supposed to be able to get back to full business. Now they just moved it today to May 3rd.
Are you in Idaho?
Kansas.
Kansas. You know, I think May 3rd. Are you a General Dental Group?
Correct.
Okay. May 3rd. I would think beginning next week. Do you have Dental Intel?
No.
What dental software do you have?
Dentrix.
Yeah. You want to give me a call. I'll show you what you can do, but you can have people work from home or not.
Okay.
Using Dental Intel, you can get set up to use it inexpensively, and it's going to enable people to work from home, track their calls, reach out. You probably have 4,000, 5,000 patients.
Right.
Wouldn't it be so nice for all of them just to get a call to see how they're doing? Not trying to sell them anything, but stay connected with them. Let them know that your anticipated open date is going to be May 4th, although I think that'll change. I'll bet you a steak dinner at a Kansas restaurant. But I think you just want to reach out to them, the people who want to be on the call team. The people that maybe are not so extroverted or people-oriented might want to not be on the call. I always ask people, do you have an appetite for making calls to people you don't know? And if they say no, then I don't ask them to do it.
Okay.
If they go, yeah, not a problem, then we put them on that duty. The other ones, you find something for them to do, or you don't bring them back. You leave them on unemployment until you need to bring them back.
Okay.
Yeah, that brings up a good
Yeah.
point. We've talked about this a lot on your webinar, but you do not have to bring everyone back at once.
Nope.
The criteria.
You need to have them all brought back by June 30th.
That's correct. Yep. The criteria say
And the amount of forgiveness is based on the wages you paid in the 8 weeks. There's a couple of conditions, right, Jonathan?
That's correct. Yep, that's correct. So, and I was on the phone last evening with a gentleman from Live Oak Bank, who Carrie, you and I both know, and he was saying they've been on calls with the SBA, and he said the SBA is they're already looking for ways that they can get this to make this very difficult to be forgiven. So I think, again, Carrie, to your point, what we've been echoing to clients is, please treat this as not only as a loan, but none of us had to personally guarantee this loan. There's really very little to no recourse. So the government will be looking at this with a fine-tooth comb, and again, we'll be as a as a team, we'll be helping, help you guys guide through the process here. What were we going to say, Carrie?
And whatever portion of the loan you don't use in 8 weeks,
Yeah.
you can still use beyond that, but you just won't have it forgiven as long as you only use it for those purposes that are spelled out and authorized to use it for.
Right. Or you can pay it back as there's no prepayment penalty. So that's
Correct.
great. Thanks.
One other thing.
Yeah, Jacob, go ahead.
Yeah, one other thought that I had is, maybe some employees, this would be a great time for training, or developing a new area of expertise or something like that. That would make you more valuable, more profitable when you are able to open.
That's essentially what we're doing. We just didn't know legal-wise if we knew, if not everyone came back, like how that would work.
Okay.
Well, I think that's a good idea, and I train on policies and strategies all day long. I think most owners are in what we call a critter state. They're stuck. They're feeling their amygdala is being hijacked with dealing with the responsibilities of patients and employees, et cetera. I listened to a webinar from my dear friend Howard Ferran and Stan Bergman talking about those concepts, and I'm going, you have to understand, fewer than 5% of dentists are economically prepared for retirement. So they're not thinking strategically, they're thinking tactically and economically. So once you solve those issues, and if you have time, spend time on the other, it is likely that the 8 weeks will expire before you're allowed to reopen. How's that for a statement? It is likely that if they push back the start from today is April 15th, beyond May, June 15th to July 1 or July 31st, which they may. This is the government thinking. And they're going to weigh out economic versus health crisis issues. I mean, I think you need to be prepared for virtually anything.
Yeah.
So I would just be tempered in my enthusiasm and build a good plan and then fund it. And it's unique to everybody in this call.
Thanks, Gary. Any other questions? All right. Well, again, we'll be sending these slides out to everyone, and that'll have Carrie's contact information up. Again, most of you, everyone on this call actually has interacted with Jacob, and as we continue to prepare for your progress meetings, we'll look at these tax strategies that are up and coming and how those apply specifically to your case, to you and your overall plan. As always, please feel free to reach out to us. We'll continue to stay on top of any changes or updates that might be coming down the road, and we'll keep everyone in place. Carrie, I appreciate your time and your expertise. Jacob, same with you. You're both valued members of our team, and appreciate you guys being on this call. Thanks, everyone, and enjoy the rest of your day.
Thanks, everybody.
Thank you.